Welcome back. Thank you so much for staying tuned in. Well, let's kickstart the show, start taking all of your stock-related queries. And today on the show, we have Kunal Parar, who's the Vice President, Technical Research and Algo Choice Equity Broking, as well as Kunal Bothra on your screens. Of course, you can see the number that you can write to us at. Do remember to mention the buy price for the stocks that you're already invested in, for the ones that you hope to be investing in. Mention the time horizon that you have in mind so that we can help you better. But with that, let's kickstart the show. Kunal Parar as well as Kunal Bothra are waiting by patiently to answer all of your queries. And the first one that I have, Kunal, is coming in for you. We have our investor who's writing to us about Canara Bank as well as BEL, wants to know about what he should be doing at this point. So what do you think about this one, Kunal Parar?
Well, let's talk on first Canara Bank. Right now, Canara Bank is trading at 85 level, and we have been seeing a very good upside momentum in the counter since last 2 to 3 days. On an early chart, stock has been trading above its 50 days moving average. So overall momentum is on upside only. If we talk about upcoming trading sessions move, then we can see a good upside momentum up to the level of 89. So from my side, is to hold advice for the Canara Bank. And if we talk about BEL, right now BEL is trading at somewhere around 278 above its 50 days moving average. And even on the early chart, the stock has given a breakout. So we may see a good upside momentum in the counter as well up to the level of 289 to 300 level. So for BEL as well, it's a full recommendation from my side. And downside strong support comes at 271. So if anybody want to go for even fresh buy, then one can keep SL at 271.
All right. All right. Let's move on to the next question then. We'll go to the next Kunal. For the sake of convenience, because both of you are Kunal, I'll address Kunal Bothra as KB. That's what we call him. So this one's for you. And finally, a cricket analogy has come up because people have been talking about a cricket analogy. So here's the Nikhil Sharma, who's writing from Mumbai. He says he's a 23-year-old. So a younger person investing there. He's an intraday trader, and he wants to know that he holds 20 shares of Tata Motors at he's bought it at 716 rupees per share. Now, since he feels that, since Tata IPL is about to come up this month, what would be the condition of the stock in the future?
Well, very difficult to ascertain the kind of news flow or such events with respect to the stock price movement. I would look at it purely as the chartical or the technical kind of a move. And looking at that, I would believe that at current levels of 40-50 levels thereabout for Tata Motors, it could turn out to be a good buying zone from a short-term perspective. Now, since you've purchased at higher levels, I think if I'm not wrong at 710 plus mark, I would believe that a better strategy for you, should be to try and average it out at current levels and then expect that the stock should come back towards the midpoint of, your purchase price towards 675 to 680 plus kind of a mark.
All right, then the next one that we have, Kunal, is coming in from Thomas George, who's writing to us from Cochin, wants to know about the 500 shares of Zentech, bought at a price of 800 rupees. What do you think he should be doing about this one?
If you talk about Zentech right now, Zentech is trading at somewhere around 1299, and we have been witnessing a very good upside momentum. Not only this, even on early chart, stock has given a breakout, of its previous bottom, previous top, which was placed at 1162. So from the present level, we may see some kind of upside movement up to the level of 1482, and if stock breaks this level, then further upside would be there up to the level of 1660. So from my side, it's a hold strategies, and we may see a very good upside momentum in the counter during the upcoming trading session.
All right, moving on then, I'll come to you then, KB. Now, one is a stock-specific question, and one is a general query. This is by Satya, and he wants to know that what are the chances of price dropping in the last weeks of March due to loss harvesting as seen in the previous years, and also is it better to wait or to buy CDSL and larger banks like ICICI or BOB? Is it the right? Are they trading at the right price to enter now?
So I'll break down your query into two parts. One, of course, is the the loss harvesting, which generally is a phenomena in the March month because it marks the end of the financial year. But generally what happens is generally by the mid of the month, 14th, 15th March itself, the major part of the loss harvesting generally gets done because of the advanced tax filing, which many has to do. So I think generally in that prospect, you don't see too much of pressure happening in the balance part of the the month or the second half of the month of March. In fact, second half of the month of March, there is the other phenomena, which is the NAV propping, which happens generally because this marks March and marks the end of the quarter as well as the end of the financial year. So that could be maybe a reason why the markets generally see a further up move. Coming to that, the second point, whether stocks like CDSL, yes, I would believe that stocks like CDSL, even BSE to that the extent at current levels, have actually come back towards a very good attractive points in terms of price trajectory. So right now we are in that phase of the markets where many of the stocks have corrected 20%, 30%, some of them have even corrected by more than 50%. So if the markets are getting into a process of a bounce, the risk reward into these stocks would start to look very attractive. It's a matter of time and patience. I think if you are okay with that, then I believe buying CDSL, BSE and such kind of names could actually turn out to be a good play.
Alright, then that's a take coming in as far as BSE is concerned, and some of those other names like CDSL, ICICI Bank. The next one, Mr. Parar, that we have is coming in from Matthews. Writing to us from Bengaluru, wants to know about HAL 50 shares. Buy price was 2,700 rupees. Wants to know if you think he should be holding or selling at this point.
Well, it's a good, he has a position at 2,700 and right now stock is trading at 3,485. I'm seeing a very good upside momentum during an upcoming trading session. Not only this, these stocks looks very attractive even for medium term to long term, because the way government is particularly focusing on defense and that too on the defense export. So we may see a very good upside momentum during upcoming trading session. If we talk about upper side level, then right now stock is trading at 3,485. If we talk about upper side level, then first target comes at 3,800, and if stock breaks this 3,800, then one way upside momentum would be there up to the level of 4,800. So from my side, it's to hold the stock. Even one can add the stock in their portfolio at present level.
All right, that's the view coming in on HAL. But I'll come to you now then, KB. There's this person wants to know about, she's Kiran writing from Pune and wants to know about, says that she has 500 shares of Jindal Saw that was purchased at 345 rupees. Zomato 1,000 shares that were purchased at 240 rupees. Now wants to know about the short-term view, 3 to 6 months. Should she say invested or exit these counters and move on to other counters perhaps to recover the losses? Now the view on Zomato for the long term remains intact, but what about the short-term perspective?
I believe that both from a short-term view, there could be a chance that, for example, Zomato specifically, my belief is that the stock should ideally correct or retest the previous lows of 200 or 204 thereabouts and slightly dip lower, because that's where generally major bottoms happen for stock prices, especially after a wave of a bounce or dead cat bounce into stock prices. So that's what I would believe, that Zomato could be in for some bit of more correction over the near term. But I don't believe that it's a stock which you should look to exit completely. It's just a phase of downside trend for the stock price. Maybe once the stock settles below the sub 200 mark, that could actually be a point where you may look to start nibbling into the stock price so that your average cost price drops lower for Zomato. So it's a good stock to hold on from long-term play, but may not be a best price currently. I would expect the stock to head towards 200 or sub 200 mark over the near term. Jindal Saw, on the other hand, the stock looks to have formed a base for itself. I think after almost 1 month of a sideways consolidation, it's trying to look attractive and getting back into the shape of a bounce. This bounce, I believe, could probably head towards take the stock heading towards levels of 300 also. That could be a better level if you're looking to switch.
Alright, then no cause for concern as far as Zomato is concerned. That's the take coming in from Kunal as well. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock related queries. And KB, the next one that we have is coming in from Deepak Dave, who's writing to us from Gandhinagar. He's a long-term investor, but he wants to know about Alembic Pharma. He wants to know if he should average at this point because he's bought 100 shares. Buy price is about 900 rupees thereabout.
Well, I think you can continue to just hold on to the stock as of now. It looks like that the stock is coming back into a recovery. And after, I think, the last 2 months of price trend, where the stock had fallen, I think if I'm not wrong, 30% from 1050 levels to 750 thereabout. It looks like that the stock is coming back into a recovery. This recovery should at least come back towards your cost price or just about closer to those levels. So 880, 900 is where I would believe that the stock should head towards over the near term. That's where I think you could be in a better position to take a call whether you want to exit or not.
All right. moving on from the technical view, I'll come to you, Kunal. Then Deepak Dave writes, he's a senior citizen. He's writing from Gandhinagar. He's a long-term investor. Has 100 shares of Alembic Pharma and bought it at 940 rupees. Should she average at this price? That's one. And can you give us a view on that?
Yes, definitely. Right now, counter is trading at 838 level. Stock has already taken the support of its previous bottom, which was placed at 728. And even on Alita, stock has given a breakout. So from my side, yes, definitely one can go for average at present level. And the way stock has been trading on a daily chart, I think we may see a good upside momentum up to the level of 920, which is its 50 days moving average. And if stock breaks this 50 days moving average, then further upside momentum would be there up to the level of 1140. So yes, definitely from my side, one can go for average.
That's a take coming in as far as Alembic Pharma is concerned. The next one that we actually have is coming in from R. Ganesh, writing to us from Bengaluru. KB wants to know about IndusInd Bank. He wants to know if this is a good idea in terms of fresh buys. What do you think?
It's become a mystery stock, frankly. IndusInd Bank never participates on the upside in the last 1 week also, where you've seen recovery from HDFC Bank, Axis, ICICI also to a larger extent. IndusInd Bank has actually gone down and reversed its course over the very short term. Now, I'm not sure of the reason why the stock has been underperforming, but yeah, I think this sudden phase where the stock is underperforming doesn't make the prospect attractive over the near term, because after such kind of a sharp correction or maybe a zone of underperformance, the stock generally takes a lot of time to come back into recovery, because then it has to negate the underperformance first and then come back into a zone of outperformance, and that requires quite a strong pickup of price action for stock prices. So I would suggest to avoid IndusInd Bank as of now. Maybe once the stock crosses the levels of 1000 back again, that could be a better point if you're looking to enter.
All right. Again, I'll come to you, KB. Big fan of yours. This person is Bhagwan from Mumbai. He's a senior citizen. He's a big fan of yours and wants to know. He's bought BSC 20 shares at 4,310 rupees and Bajaj Finance shares at 83,490 rupees per share. Your advice: hold, or is it time to sell now?
Thank you so much for that. First of all, now on both of the stocks which you've mentioned, BSC as well as Bajaj Finance, I would actually be bullish on both of them, but from different time frames. For example, BSC specifically just could be a more of a short term play. The stock is at 4,200, 300 kind of a levels. The risk reward would start to look attractive at current zone. My sense is that the stock should come back towards at least 4,800 to 5,000 kind of a zone over the near term. So that could be a good short term play if you're looking out for. Bajaj Finance, on the other hand, could be a very good quality stock, and even at current levels where the stock is, I think, just about few hundred points away from a lifetime high levels, because of the quality of outperformance the stock has shown consistently in the last 6 months to the last 1.5 odd year, and the fact that the stock has come out of a major, or is on the verge of coming out of a major consolidation of multi-year, that's also another positive for Bajaj Finance. So would be bullish on both of these names, but as I said, from different time frame.
Alright, then that's a take coming in as far as both of those counters are concerned. Lots of queries that are already pouring in when it comes to BSE. So I hope that answers Savi's question as well. But the next one that we actually have, Mr. Parar, is coming in on Textrail, because Sudha is writing to us and she's bought it at 213 rupees. Now she's mentioned that she's sitting at a 30% loss thereabout, hasn't mentioned the buy price, but wants to know if she should average at this point.
Well, if you talk about Textrail right now, Textrail is right now Textrail is trading at somewhere around 145, and we may see some kind of upside momentum in the counter, because the way stock has been trading above its 50 days moving average, and the way stock has formed its bullish hammer condition formation on a daily chart. I think further upside momentum would be there up to the level of 153. Even not only this, even on a weekly chart, stock has taken the support of its 120 level. Even before stock took the support of the same, and afterwards it went up to the level of 240. So we may see some replicate momentum in the counter at present level. One can get into the stock, or if you have already this stock in your portfolio, please hold this as of now. First target that we can see is the 154, and if stock breaks this level, then further upside momentum would be there up to the level of 172.
Right, that's Texmaco rails on the long-term perspective. But KB, coming to you, this is Venkatesh who's writing from Tirupati. He's purchased 50 shares of Voltas at 1,400 rupees. He wants to know whether he should stay or exit. I mean, Voltas, it has, it's down 40% from its highs. Now on, what do you see? I mean, we also have summers in full swing. So what do you see for Voltas?
So my belief is that that the stock is into a huge underperforming spree. Now I understand that the stock price has a lot of fundamental factors to move up. But then when I look at this purely as a chart, the way the stock had fallen from 1900 levels, start of this end of the previous calendar year towards a point when the stock was almost at 1200 mark, indicates that the stock would go into a major time-wise consolidation. So from 1200 levels, the stock has bounced off to 1400 mark thereabouts, where it's trading right now. But I believe that there should be a retest of the 1200 mark. That's my sense when I look at the near to medium term charts for Voltas. Maybe over the next 2-3 months, you might probably expect one more round of correction into the stock, and closer to 1200 mark, if it happens, that could be a maybe slightly better zone than buying the stock at current levels.
Alright, then that's a take coming in. As far as Voltas is concerned, the next one that we actually have is coming in from Sarita, who's asking us not just about Birlasoft but also about Equitas Small Finance Bank. That's currently trading around those 59 rupee levels, Mr. Parar, and Sarita in fact wants to know about both of these counters. 1,000 shares of Birlasoft is what she's holding on to. 460 was the buy price, and even when it comes to Equitas, she's sitting at a loss at this point because 1,000 shares at a buy price of 110, nearly double of what the stock is currently trading at. So what do you have in mind when it comes to both of these counters?
Well, let's talk first on this Equitas Bank right now trading at 59, and she has a position at 110, and on a weekly chart, stock has already taken the support of its previous support zone at 55. Right now stock is trading at 59. We may see some kind of bounce back momentum in the Equitas Small Finance Bank. So this is the perfect time to get into the stock for averaging. If we talk about upper side level, then we may see a good upside momentum in this counter up to the level of 65. Stock breaks this 65, then further upside momentum would be there up to the level of 75. Now I think this stock may take some more time to attain this 75 level, but yes, this is the perfect level to go for average. Now let's talk on the Bsoft. If we talk about Bsoft, the way stock has been trading on a daily chart and overall IT pack, I think one should wait as of now, because we have been witnessing a very high volatility even in Nasdaq, and that's directly hampering our Indian markets, Indian IT firms as well. So for Birlasoft, I think please hold as of now. I can't comment right now. I can't comment as of now on this particular counter.
All right, we'll keep going with all your queries on the other side of this break, but it is time for a quick breather. Don't go anywhere. We'll be right back. Welcome back. You're tuned in to Buy Now, Sell Now, where we are taking you through all your queries and we're getting them answered by our experts. So let's resume with that then, and let's get on to our next query, which is, by Ramesh Sundar. He writes about Siemens. He has, Siemens. He's purchased Siemens at 5,832 rupees. Also, he says that it's now down at 5,119 rupees. What is the option for him? Should he exit or should he hold? I'll come to you, KB, for this.
So I believe that you should hold on to the stock, and I also believe that you should look to even average it out further. Maybe not at current prices, because the last 4 days the stock has moved up almost 10% from 4,600 mark to 5,200 thereabouts, which the stock made a high yesterday. But I believe that somewhere in between, say closer to 4,800 mark or 4,950 mark, that could be a better level where you can look to average out further. Because now what could happen is that the stock would rebuild its process of trying to repair itself from this major downtrend over the last 3-6 months. And stocks like Siemens, they don't correct by 30-40% every single time, and historically whenever that has happened, it's actually become good buying territories for long-term traders. So my belief is that Siemens at current levels, maybe not exactly at current levels, but say closer to 49.50 mark could be a very good contra buy.
Alright, then that's a take coming in as far as Siemens is concerned. The next one that we actually have is coming in from Ekam Baraya, writing to us from Hyderabad. Mr. Parar wants to be redeploying some capital within the pharma pack, wants to know what you think about Dr. Reddy's Labs or Natco for that matter for fresh buys.
Let's talk on the Dr. Reddy first. Right now, Dr. Reddy is trading at the 1141 level. Technically, this stock looks very attractive on a weekly chart. Not only this, if we talk about moving average perspective, this stock has been trading above its 200 and 100 weeks moving average. So, long-term trend is on upside only, and right now stock is trading near to its bottom. So, this is the perfect time to get into the stock for long-term perspective. If we talk about upper side level, then we can see momentum up to the level of 1265, and stock breaks this 1265, then further upside momentum would be there up to the level of 1400. So definitely Dr. Reddy looks very attractive. Now let's talk on the Natco Pharma. Right now Natco Pharma is trading at 827, and we have witnessed a huge correction in this counter, and high volatility is there as of now in the counter. So I think one should avoid this counter as of now.
All right, moving on from that then, the next counter is Mazagon Docks. KB, this is Venkatesh who's writing from Bangalore. He holds 50 shares of Mazagon Dock at 2,000. He's bought it at 2,269 rupees. He wants to know whether he should be holding on to it or should he exit this counter.
So I think if you're ready for holding on to the stock from a longer term play, my sense is that the stock should actually perform very well for itself, because what's happened is that over the last 6-7 months specifically, the stock has held on to that 2000 mark at a point when many of the stocks in the similar space, they went into a 40-50% correction. Some of them I think fell by more than 45-50% also in the same space. So when you see such kind of stocks which are relatively very strong, which tend to break down much less as compared to the other peers, that's actually considered to be a positive sign for stock price. And then whenever the markets recover, these are the kind of stocks which have recovered quite well. Mazagon Dock from 2000 has come back towards 2300 mark. So there could be a possibility that maybe after a 50-100 point or further rally, the stock may get into a further time-wise consolidation or correct one more time. But then ideally, these are the kind of stocks which perform very well from a long-term play whenever the markets resurrect itself. So the point over here which you have to ascertain is your time frame. If you are looking at it as just a 3-month, 6-month horizon, then maybe booking out profits over here and then re-entering at lower levels could be a good strategy. But if you're looking to build your portfolio from a long-term play, then I think you should definitely look to hold on.
Well, then looking at your time frame is key when it comes to Mazagon Dock. That's the take coming in. As far as Kunal is concerned, the next one that we actually have, Mr. Parar, is coming in from Srinivas, writing to us from Hyderabad, wants to know about Reliance. At present levels, for a time horizon of say about 9 months, what do you have in mind?
If we talk about Reliance, right now Reliance is trading at 1255, and we have been witnessing a very good upside momentum since last 3 days. In today's trading session, Reliance is trying to trade above its 50 days moving average. Not only this, on a weekly chart, stock has taken the support of its previous support zone, which was placed at 1150. So stock looks very attractive. One positive news was there related to Geo Finance, that it acquired its remaining stake for Geo Payment. So all this goes in favor of Reliance as of now. I think one can get into the stock at present level. Right now, stock is trading at 1252. And if you talk about longer term perspective, let's say for the time period of 9 months, then we may see a good upside momentum up to the level of 1330. Now, this is the main hurdle. If stock breaks this 1330, then further upside momentum would be there up to the level of 1440. So we can expect a very good upside momentum in this Reliance counter.
Kunal, I'll come back to you yet again. This is Tushar who's writing from Delhi. He wants to know about the long-term view on ITC Hotels.
If you talk about ITC Hotel recently listed stocks, and we don't have that much of chart history, but yes, definitely the way stock has been trading, the way all the hotel industry charts right now has been trading on a daily chart, and the way I think summer vacation will be there after this 15th of March, so it will be like a huge benefit to all the hotel counters, service industries, and all, and we may see a good numbers as well during the quarter 2. So I think one can get into the stock at present level, seeing this summer vacation and seeing this quarter 2 level. Right now, stock is trading at 174 level. One can keep SL at 166 if it's for trading perspective. And if we talk about long-term perspective, then one can get into the stock at 174. First target we can see it's like 220 as per the Fibonacci retracement. And if stock breaks this 220, then further upside momentum would be there up to the level of 260.
Take coming in as far as that particular counter is concerned. Of course, a recently listed counter, but the next one that we have actually, Mr. Parar is coming in from Bhuvaneshwari Ganesh, writing to us from Chennai, wants to know about Karnataka Bank. Buy price was 199 rupees. Wants to know if he should be averaging at this point.
Well, I think please avoid as of now to get into the stock for averaging. Right now, stock is trading at 180 level. I think we may see some kind of correction from the present level up to the level of 173. If stock approaches this level 173, then only I think she should go for averaging. Afterwards, we may see a good upside momentum up to the level of 185, and stock breaks this 185. Then further upside would be there up to the level of 200 levels.
Moving on from Karnataka Bank now. Now this is another query coming from Krishna from Chennai. Wants to know which is good for investing: Tech Mahindra, Persistent System from the IT space. Let's take a technical view on this one first.
You're asking to me?
KV, this is for you.
Yeah, okay. So for Tech Mahindra and Persistent, I would believe that Tech Mahindra and Persistent, both of them are very distinct in terms of the charts, because Tech Mahindra is a bit of a slow mover, but whenever the stock has gone back into a breakout mode, we've actually seen the stock do pretty well for itself on the medium to long term basis. Persistent, on the other hand, I think is a stock which is very high beta, or a relatively high beta stock as compared to Tech Mahindra, and that stock is also, there was a point when the stock was into a huge outperforming spree, when I think till mid of 2024 or the second half of 2024. So I would believe that it's difficult to choose between these two names, but my shorter term belief is that the IT stocks are actually going to a corrective wave. Maybe over the next 1 to 3 months, you might probably expect that these stocks may correct or drift lower by a margin of say another 5% broadly from current levels. So if you're looking to buy, I would believe depends on your risk appetite. If you're okay with high beta stock, then Persistent and Coforge, if I can add that, could be better bets, but especially buy on dips could be a better strategy.
Buy on dips is a better strategy when it comes to that particular counter, and for Persistent as well. That's the day coming in. As far as Kunal's concerned, the next one that we actually have is coming in from RK. Mr. Parar, he's writing to us about Jindal Stainless. Wants to know if this is a good time to enter. What do you think?
Well, if you talk about Jindal Stainless Steel, the way stock has been trading on a daily chart, I think we may see a good upside momentum in overall metal sector. The stock has already given a breakout of its cup and handle formation on a daily chart. Stock has been trading above its 50 days moving average. Not only this, on a weekly chart, it has been trading above its 100-week moving average. So all the clues, that all the equation that we are getting in favor of bullish side sentiment only, one can count into the stock at present level. If you talk about upper side momentum, then 960 960 the first target. In stock breaks this 960, then further upside momentum would be there up to the level of 1010.
That's Jindal Stainless, I beg your pardon. Now moving on then, this is a query coming in from Venkat from Chennai. He says that he has 6,500 IDFC First Bank shares. He's bought them at 69 rupees and he's been holding it for more than 8 months now. He wants to know if he can hold this for a longer period or should he add more at the current price. He wants your advice, KB.
Well, I would just suggest to hold on to the stock as of now. And I understand that the stock is available at a very good price. But the only catch with IDFC First Bank is that in the last 2-3 weeks, the stock has gone through a sudden zone of relative underperformance as compared to many of the mid cap and the private banking names. So whether it's, for example, RBL Bank, Bandhan Bank, in that context, IDFC First Bank has underperformed. So it's better to wait out for that phase when the stock comes back into a zone of outperformance or at least relative strength with respect to the peers. That could happen if the stock comes closer to 64 mark as a breakout point. So I would suggest that you should look to average further for IDFC First Bank whenever the stock breaks past about the levels of 64 plus.
Other than that's a take coming in as far as IDFC First Bank then is concerned. Thank you so much, Kunal Bothra as well as Parar, for joining us, taking time out and answering all of those queries very, very patiently. We've also managed to take a masterclass on technical analysis on this techie special, on this edition of Buy Now Sell Now. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.